Okay, real life traders, Friday. What are we? November 3rd. Wow. The year is just going quickly. We got Thanksgiving coming up and then Christmas. It's like funny. It's like, once you get past Halloween, it's like as soon as Halloween's over, it's like, okay, Thanksgiving. And then, like we already have we do this thing every year. The day after, well, not day after, but the weekend after Thanksgiving. We do this big, huge tailgate at a local tree farm, bunch of friends. And and we just go and we tailgate, and so then that's already Christmas, right? So we go and we cut down our Christmas tree, but it's just crazy to think here we are, November 3rd, and the year's almost over. So all right. Anyway, I hope everyone is having a good Friday. Let me go switch real quick. I want to just take a look at the broader markets before we jump into a couple of these individual tickers. Let me just go here. What do I want to look at? So it's interesting, because listening to Yates, I know that like Yates looks at SPY and also Qs, and I'm more like I obviously look at SPY and Qs, but I'm more like watching the ES, and I gravitate, I should say, towards the ES and the Nasdaq, because to me, I just look at the SPY and the Qs are just a reflection of the S&P and the Nasdaq. So anyway, let's just take a look at this. I'm curious. Is Al here? Let me go to Al. Are you here? I'm just wondering if you're with us right now. So a couple weeks ago, during one of our Friday sessions here, I did kind of a spontaneous giveaway. I said, if anybody could answer a particular question, but tell me not just yes or no, but specifically the reason why yes or no. And anyway, long story short, Al won, and it was just a 1 hour coaching session. So Al and I finally got to do our coaching session. What day was that? Today's Friday. Did we do it yesterday? Yesterday or Wednesday? I'm going to go with maybe it was yesterday. Wow. The days just kind of roll into one. But anyway, our hour session turned into a 2 hour session, which is great because we were just, covering all kinds of stuff. But I was wondering if Al was here because we were talking about specifically where we were with the S&P and the Nasdaq. So if I scroll out a little bit here, right, let me just so we can get a little bit more context. Right. So what I was saying to Al, like these lines here that I have on here, they have been here for quite some time. They've been sitting there all through. Well, I didn't want to do that. Hang on a second. They have been on here ever since we went through this bear market here, right? So you can see here's the bearish trend line, the purple line here, and then here's this move, and then and I just leave these lines on here because I'm curious to see what happens when we interact with those lines, those levels again. I'm actually gonna duplicate this one. I'm just gonna move it right up here just so I have a line right up here at the previous high. So when people talk about technical analysis, I mean, it's when you look at this stuff and you go, okay, it works so well. I mean, it's just like for those people out there who say, well, technical analysis, doesn't work. I would argue, look at this chart and just look how, like when we got out of this bear market, right? Here we are, breakout. What do? Perfect retest to that trend line, right? So whether it's a diagonal trend line like this, horizontal, doesn't matter. It's still support resistance, right? And if you look through this downward trend here, look at all the times that we went up against it, right? Perfectly, right? And again, it doesn't have to be right to exactly to the line, but as long as it's near or it could extend slightly beyond. But look how many times we perfectly interacted with that line, broke through it, came down, and what did we get? Retest right off that line. Anyway, so we moved up. Fast forward to the other day, and Al and I were looking at this area here, and I was like, okay, but what do you think? Are we back into a a bear market. I'm like, no, we're not, in my opinion. I mean, we're not back into a bear market at all just because we have this pullback here, right? I mean, if you think about it, and that's where like people start panicking. They see like, okay, well, now we're making a series of lower lows and lower highs. Okay, that's fine. But does that mean that we're in a bear market? Right? Well, if your only definition of a bear market is lower lows, lower highs, and I guess that meets your definition. But when I look at this and I go, okay, well, if we look at this overall move, right? And if I throw on some fib retracements here, just from here to here, right? Look at where we're bouncing. We're bouncing right at the 618. I mean, that's where I'm looking to buy after we make this move and we get this pullback, right? My buying zone, my ideal location for buying is somewhere around the 50%, 61.8. And then also I have on here this 66% that I've talked about previously. But those are my areas where I'm looking to buy. So when like, it's interesting when people go, oh, well, but look at this, lower lows, lower highs. I'm like, yeah, but this is just a, technically, even though this is a daily chart, this is just a micro trend as part of a macro trend, right? So here we come right down into this 61.8 zone. And what happens? Look at this beautiful bounce that we get. Now, is that going to be sustained? I don't know. But what I do know is that based on this previous move here, where we were making higher highs and higher lows, right? We clearly see that. And then we finally started pulling back. And then like, this was like the real critical right here, right? This was a critical pivot, which we came down and then we double bottomed, came down again, hit it again, and we went up, right? And then we finally broke it. And then when you look at this, you go, okay, well, drop a price line in here. When you look at this and you go, well, where are we now? Okay, well, right now we're back at a critical level because this previous support, which was clearly support here, support, came down here, and then it finally broke. We got up above it temporarily, right? Double topped and then broke it again. But here we are. We're right back to it. Okay, so what's going to happen next? I wish I knew, right? I wish I had a crystal ball that would tell me. I don't know. But what I do know is that I can look at this overall picture, right? Not just isolating in on this part here, but look at the overall picture and go, okay, this is a reasonable expected area to bounce, and we've done it. And we came out of this. I mean, that's a great, strong bounce. If you look at that, look at all those bullish candles, right? So where are we now? Well, as I mentioned, here we are. We're right back to this level, this line here, which is the previous support, which is now going to be resistance. So what can we expect to happen next? Well, again, I don't know, but if I had to come up with a theory on what was going to happen, look at all these bullish candles in a row, right? So we have, after this red candle, 1, 2, 3, 4, 5, right? So basically from, all 5 days of this week, boom, right? Look at that strong bullishness. Is that sustainable? No, right? It's like this is no different than you sprinting uphill, right? At some point, you're going to run out of steam. You're going to need to slow down. You're going to have to walk. You're going to catch your breath. Well, it would not be, and look at where we are right now. Okay. So not only are we at the red line here, previous support resistance, and we also have the 50. This is the daily 50 here right now, right? We're right into it. So what can we expect, or what I should say, what am I expecting for next week? After a move like this, I wouldn't be surprised if we got some type of a pullback next week down into this range. Now, also looking at where we are now, we have, here's the 10 EMA that's upsloping, the 20, they're going to be crossing next week. So I wouldn't be surprised if we got back down into this range here, right? Somewhere in here, pull back, bounce, right? So Where? What level? Well, again, I don't know, but we can just do a simple thing, which we've already done, but now we can just do it on this micro level, and we can just do some fib retracements, right? And so if we are pulling back, and I just talked about how these lines are crossing, here is the 20, I'm sorry, the 200 on the daily, this purple line here, right? And they're all falling right into the bounce area with the fib retracements. Here's a 38.2, here's the 50. So next week, if we pull back down into this range, am I going to be completely shocked? No. And as a matter of fact, what Al and I were talking about in our session is that I'm trying to remember what day it was. Maybe it was Wednesday, because we were saying, I think it was Wednesday. It was for sure. Because I was saying on this day here, now it didn't happen. I was expecting, I wouldn't be surprised if the next day, meaning Thursday, if we pulled back into like the 30% range of this candle and then went up. Well, we just opened and we ran. So we didn't get that kind of pullback that I was expecting. But what I said to Al was, if we pull back here, right? And regardless of whether we pull back or not, I was expecting after this move here, we would likely come right up into this 50 and then pull back, right? Because like I was talking about, well, should we, after this, should we be looking to go short? I said, I'm not looking to go short now. I'm looking to go long, right? I'm looking to go long and then go short here. So if I'm going to look to go short, it's going to be off of this 50. And, again, is that going to be, the right play? I won't know until come Monday. I want to see Monday how we open. But again, I would not be surprised to see at this point, especially since we got right into this 50, poke through a little bit here. We got rejected. I wouldn't be surprised just to now see this just pull back down and back into this zone here, this range here, and then get that bounce up. So that is at least my analysis, just what I'm going to be expecting for next week for the S&P. And again, this applies to the SPY as well, right? Because again, the SPY doesn't exist without the S&P. I'm just curious, any thoughts, questions, anything on that from the group? Grab myself a little drink of water. Let me know if anyone has any additional thoughts on that. Be curious. If not, we'll move on. We can just take another look at, just real quick, we'll do the same thing with the NASDAQ. I don't need to go into as great detail because it's going to be very similar. So good question. Okay, so the question is, if I expect it to pull back from here, would you consider the short or would you wait for the long again? Well, the answer is on that is like, okay, if my theory, if I'm thinking that we are going to have a pullback down into that 50% range, well, I can just go short through that move, right? So I can short it on the way down and then look to go long when it at that area where I expect it to bounce. So I would just look to do both. I would look to take it short, right, down to the area where I expect it to bounce, and then off that, I would look to go long, right? Play it both ways, make money on the way down and the way up. All right, so NASDAQ. So similar look, right? Again, I don't need to go into that great a detail about, all the trend lines and all that. But again, here we are. Let's look at where we bounced. Okay. So came down here and similar, but the charts are similar, but they're still very different. But here we have, this line here, we came down, obviously support. We broke it. Now, again, here's the thing about these, support resistance lines. And what I want to emphasize here is, just because you got 2 days with a close below this line doesn't mean that level is broken, right? Price can penetrate an area, right? It can go through these support resistance areas. It's only broken. It would be broken if we came down here a couple of days, came up, and then we rolled, right? But after we came down here these 2 days, we didn't come up and then make a lower low off of this pivot here, right? So this, once a price comes down here, it doesn't mean that this price level is broken. It's been tested, it's been penetrated, but it's not broken, right? So price came down here, you get this close below it on this candle, comes down here. But coincidentally, what do we have right here? Well, here's the 200 on the daily, right? Now, again, same as these horizontal lines or the vertical trend line that I was looking at before. Price doesn't have to touch that area for it to be the bounce, right? So, but it can get close, and that's what happened here, right? So price doesn't have to come down and perfectly touch this 200 on the daily, but it got close. And look at this bounce that we got out of it. Now, this bounce that we got on the NASDAQ, not quite as obviously strong as in terms of candle size, right, as the S&P, but still very strong. And what do we have here? 1, 2, 3, 3, 4, 5. So 6 bullish days. Okay. Whereas we had 5 on the S&P, but they were all larger candles. We had a series of smaller, kind of more indecision candles through here. Then we got this big push, up here. But again, where are we? Right? We're right into, so on the S&P, where we were right into that 50 and getting rejected. Well, here on the NASDAQ, we're into the 100, this light blue line. Got in here. So we're, and of course, that's where price stopped today, right? So for all intents and purposes, that's where price got rejected today. We ran right to it, got a little bit of an upper wick off of it, and and that's where we are. So again, what would I expect for next week? Is this an area where we could expect some type of a retracement? And if let me zoom out back out, I don't have a line here, but I bet you anything, if we were to put in a horizontal line just on today's close, well, yeah, we have it right through here, right? And again, I'm just going off of today's close, right? Just put that line in there. I wasn't even looking at the rest of it. I just wanted to see, was this an area where we had multiple touch points where it was acting as support or resistance? And actually, if I move this up a little bit and we go off today's high, yeah, look at that. That's even better, right? Look at this, right through here, all through here. These candles came down. Again, price penetrated it, but it closed and it held that line, right? Broke through, held it here, broke through, right? Held it all through here. So you can see that this, where we stopped today, not just because of the 100, but just because of previous price action, right? That's a reasonable place to have gotten rejected today. Oh, okay. So the question is, not sure if this is important, but what do the dots above the candles represent on your chart? So you're talking about these black ones here, I assume? Yeah. Those, I believe those are, there's a, pretty sure, I'll click on it in a second, but there is a indicator, NR7 indicator. I don't know if you're familiar with it. What it's saying is, I believe what it means is that it is the smallest candle in the previous like 7 days, compared to the previous 7 days, it is a small candle. So I'm just curious, if I click on it, let's just see what it is. Yeah, NR7, edit study NR7. If you want to, I wouldn't bother with, I wouldn't spend a whole lot of time with it. It's actually something I should just take off my chart. It's probably been there for years and I just don't even look at it anymore or think about it. But again, I think that NR strategy, if I remember correctly, it's just supposed to indicate, if you look at these candles where it's showing where it's above, right? So this candle, and this one, if you look at the previous 7 days, it's at a much smaller range than the previous 7, right? So this candle, right? They're looking at like back in 7 days and they're saying, okay, that's a pretty small candle. So the idea behind that is it's just like compression, right? Yeah, supposed to indicate a likely breakout. Yeah. So again, I don't even use it. It's like, I should just take it off my chart. Quite frankly, I wasn't really aware that it was still there until you asked the question. So anyway, back to, this move here, right? Okay. So we're right into a level. And so what would I expect? Well, I'm going to expect the same thing that I, am thinking about for the S&P. So if I throw on now again, here is my fib retracement just based on this last move right here, the last, what, 7 days, 1, 2, 3, 4, 5. So yeah, so last 7 days, including this bearish candle here, right? Off the low to the high, and 50% retracement, 61.8 is right where this previous support resistance line is, right? Which I know from laying out this line previously that was a strong level, right? Again, price can go through it. It can go through it. That's okay. So I know it's, think of it more as a zone versus an actual like dedicated line in the sand. But coming back down, it wouldn't shock me that next week if we got a retracement down. And keep in mind the Fibonacci retracement, right? The buying zone is between this 38.2 level and, again, technically 61.8, but I have the 66 on here. But anywhere within this zone here is where you could expect the bounce. So it would not shock me, it would not surprise me if next week, if we got a pullback down to here and then we bounced out of it. Now, could that all happen in just 1 week? I don't know. It could maybe take a week and a couple of days the following week. I don't know. But I'm just right now just trying to come up with some type of a thesis for next week. What do I think is going to happen? And look, I won't really know until Monday. When the market opens on Monday, I'll watch to see what the price action is doing. And if it gaps up, okay, well then we're talking about something completely different, right? If we get a gap up, right? We'll have to see. But after that many bullish days in a row, right? After that move there, you should be expecting some type of a pullback, some type of a retracement. Again, running full sprint up a hill, you're going to have to slow down and walk for a bit to catch your breath before you can make the next move up. All right. So that's my thoughts for the broader markets. And again, so if I'm thinking that is what I can expect, I can take this short, I can short it down. And again, if that's that's what I'm thinking, if that's what I'm seeing, I can short it just with shares, right? Day trading, right? And in that case, obviously I'm not using I would be using the Qs, right? If I was going to do that, but you could also short it with options, right? So if I was looking at doing that next week, let's say come Monday, if Monday I wanted to get into some puts on either the Qs or the S&P, if the market opens and I go, okay, I'm seeing what I was expecting to see, could do some puts, right? And then the question is, do you want to do, if this is Monday, then I could be, depending on how long I think I'm going to be holding those puts, I could use that Friday's expiration. Or if I think that this could actually take the entire week, meaning could take until Friday for this to pull back into that 50% range, I might very well use the following week's expiration, right? So you want to remember, if you're doing this with options, if you think if you think this pullback is going to take the full week to happen. So if you think about this move here, it took the entire week, right? If I think that this is going to take the full week to pull back here to that 50% range, then I might want to consider using the following week's expiration because of theta, right? So theta won't really be, with those weekly options, it's not necessarily going to be a big deterrent for the first couple days, right? So Monday, Tuesday, Wednesday, but now come Wednesday, certainly Thursday and Friday, if you're holding that week's expiration, theta is just going to eat away at the value of that option. So again, just something to consider, that if you think it's going to take 3 days for that to happen, then yeah, feel comfortable using that week's expiration, that Friday's expiration. If you think it's going to take the entire week, then you might want to use the following Friday's expiration. All right, just a couple of things to think about in terms of options if you're looking at doing this with options. All right. Any questions on that before I move on? Let me grab a drink of water real quick. So any thoughts, comments, Opposing views, if anyone has it, I'm open to it. Okay, not seeing anything in the chat, which is fine. It's interesting because I sometimes I love getting somebody who has a different point of view to it, right? Who might look then go, well, I'm thinking that something different, right? Because that's look, I don't know for sure what's going to happen. This is only what I am expecting based on my own thesis and my own market analysis. All right, let's go to PLTR. I want to just PLTR had a really nice move. So I've got let me shorten this up. So I've got a couple different positions on PLTR. So is everybody here knowledgeable, comfortable, actively trading like covered calls? Give me a 2 if you are not actively, like, if you're not familiar with covered calls. Or okay. All right. So and I'm hoping I'm saying the name Arsenis. Am I saying that correctly? Arsenis? Arsenis. Close. Short E. Short. Arsenis. Arsenis. Got it. Okay. Okay. So Arsenis. Covered calls, right? So if you own, you have to own a minimum of 100 shares, okay, to sell a covered call. So what you're doing is the reason it's referred to as a covered call as opposed to a naked call, right, is that you own the shares. So if you own 100 shares of any particular stock, you can sell a covered call against it. Correct. You got it. Right. So yeah. So and the reason you want to make sure, like, it's different. Like, so what I'll do if I'm looking to go, so if I'm selling, if I'm selling calls, I want to make sure that I have the shares to cover them. Okay. Versus I can sell naked puts, which I do all the time. And with selling naked puts, I don't own the shares, but I'm okay owning them, right? So the difference is with, if you don't have the shares, right, to cover the call, you can really get hurt if this makes a gigantic move on you. On the naked puts, right? The way to think of it is naked puts, you get paid basically to buy that stock. And again, I want to clarify this. I only do naked puts on a stock that I want to own. That is the most important thing. You don't want to just do naked puts on anything. If you're going to do naked puts, you want to do them on a stock that you want to own, and you want to get paid to buy it at a discount, potentially buy it at a discount, because you don't always have to. You sell someone the right to sell you the stock at the strike. Yeah. So basically what you're doing is you're borrowing the shares, right? Because you're selling something that you don't own, right? And then if you get what they call, if you get put the shares, that just means the broker then requires you to buy those shares, right? So for instance, here, if I sold naked puts on PLTR at $14, and at the time of expiration, if the price was $13.99, well, then if I sold one contract, well, then I have to buy 100 shares at $14, right? So I have to make good on that. So I wouldn't recommend doing naked calls, right? Because you can really get hurt on that. The thing with the naked puts is, again, because you are doing it on something that you don't mind owning, I'm okay buying a stock that I want to own at a discount, right? Because I'm selling those naked puts far away enough that, it makes sense to me to get paid to buy that stock at a discount. Okay. So covered calls. So yesterday, I have what I have. I think I've just under 1,000 shares of PLTR currently in 2 different accounts. So yesterday we got this beautiful gap up, right? So I was looking to sell the covered calls on this day, but here's the thing, okay? Sometimes the best time to sell the covered calls isn't on the initial move if there's follow through, right? So yesterday here, yeah, you got that move, but it was on earnings. So here's what happens if you're not familiar with the term volatility crush. Okay, if anyone isn't familiar with, basically what happens is the price of the options gets inflated, right? Because of volatility, the closer that you get to earnings. So here was earnings, right, on this day. And so that was just yesterday, right? So as you get closer and closer to earnings, the implied volatility goes up on the options, right? So if you're buying those options, if you're a buyer, you're paying a premium, okay? If you're a seller of options, you're receiving that premium. But what happens is, let's say you sold, or let's say you bought puts. I'm sorry. Let's say you bought calls somewhere right in here, right? In the days leading up to earnings, you bought calls. And let's say you bought the $18 call. Actually, just say 17. Let's say you bought the $17 call in the days leading up to it. Because of the implied volatility, you would have paid a premium for that. And what a lot of people don't realize when they are trading options, and certainly if they're a buyer of options, what happens when earnings comes out, right? Within hours, so if you think about this, so earnings came out and what happened? The stock gapped up, right? So anybody who owned a $17 call was very nicely profitable, right? And what I've seen people do is they go, and let's say that call is expiring. Let's say you still have 30 days for that call before it expires. What people have noticed is the market will open. They're seeing the value of their call. Obviously, they're profitable. So the value is whatever it is, and they've seen this really nice profit. And then price starts going up and up and up during the day. And next thing they know, they start seeing the value of their option actually losing money. And that's due to what they call a volatility crush, right? So what happens is the implied volatility is picking up into earnings, but as soon as earnings comes out, within hours of earnings, the implied volatility just drops out of that value of the option. So you have to be aware of that, because you don't want to continue holding that, right? Take your profit. And if anybody here has ever experienced that firsthand, where you're actually sitting on a nice profit, price is actually moving in your direction throughout the day, as after, let's say, earnings came out in the morning, price is actually moving in your direction, but you're noticing that you're not, either your value is flat on your option, or you're actually starting to lose money. And that's because of this volatility crush. So the point to all that is why yesterday was not the ideal day for me to sell the covered calls. Because if I'd hit this perfectly, like, because this ran yesterday, if I zoom in here on the 3-minute chart, right? When it opened, if I timed it and I'd sold the covered calls right here, I would have been fine, right? Because that was right in the at the beginning of the market open, right? It basically ran to its high of the day immediately, right? So the volatility crush hadn't come in yet, right? But if I waited and then tried to sell them here, well, by that point, right, by 1 o'clock in the afternoon, 1:30, that's the volatility crush has happened, right? And so I would not have gotten as much money here as if I tried to sell them here because of that volatility crush. And so, and I didn't. I wasn't able to time the market. Like it got up to here, and I thought, okay, well, it could go higher. And then, of course, it just sold right off, right? And even by here, by 10 o'clock, this would have been less money. The value of the option would have been less here than here, just because of the 30 minutes that went by. So anyway, long way of saying I waited till today. So I actually sold in one of my accounts, sold some cover calls, and I luckily, again, this was just pure luck. I sold them like right as it crossed over $19. I was like, I had already had, I don't know why the line went away, but I had an alert set. Oh, it went away because it was an alert. I had an alert set. If you're not sure how to do this, if you right click here, right, and you can create an alert, and you can say, alert me if the price goes above, 1850. And that's where I had it. And then it will send you right down here. It's going to notify me with sound, email, and a text message. So anyway, that's what happened. I got the alert. I'm like, all right, let me check it out. And so I knew that $19, that kind of round number, right up here, 1930 is where we got rejected before. So I knew based on that somewhere, if you look, like I never go right to the very high. I always come down a little bit. So I knew somewhere right around that $19, that whole number was about where I wanted to try to do it. And just timing wise, I happened to sell it perfectly. So I sold my cover call. But the other point I want to make here is when you're selling cover calls, right? So Arsenis, when you're selling cover calls, you want to do it on a big up day, right? This day, right? Big up days. You don't want to sell them on small days, right? Because what happens is when you get a big day like this and a big, huge candle, you're also getting increased volatility, right? Increased implied volatility. So you want to sell it when the volatility is high as a seller. So on days like this, right? Yeah, so it's creating volatility. So you want to sell your cover calls on big days, right? So that's why when I saw this open and it ran down here to 1775 and then got up here to 19, I'm like, I'm looking at a big candle at that point. I'm like, perfect time to sell it, right? So again, I'm just pointing that out, that you don't want to sell cover calls on days when there's small candles like these, right? You want a big day, right? Big bullish. And conversely, if you were selling naked puts, if you ever get into naked puts, you want to sell them on a day like this, right? And again, ideally, you don't want to sell them on the first big day if you're selling cover calls, or the first big bearish day if you're selling naked puts. Wait a day, right? And that's what I did today. So, and I got more money here today than I would have gotten yesterday. So it was a good wait. All right. Any questions on that before because I want to dive into a little bit more on PLTR, but I want to drill down into the daily chart. All right. So let's go. I'm going to stop the share for 2 seconds because I want to set this up perfectly here. Let's look at this. Perfect. Okay. Let me go back to my screen share. Okay. So this is PLTR. This is yesterday on that gap up. Okay. And so what I wanted to do, actually, I need to pull the chat back out real quick. Okay. So what I want to do is walk you through, again, since we're talking about analyzing price action and volume, right? We've already covered some of that with the with the covered call, but specifically with an intraday day trade, right? I want to go over, like, this was a really good example of, and those of you who've been here for a while and you've listened to me, you know what I'm going to be looking for here, right? So my key things that I'm looking for when I am looking at double tops, double bottoms, or just the high of the day, the low of the new low of the day, but a hammer at the bottom of the move, right? Whether it's a double bottom or just a new low of the day, a hammer with volume, or I'm looking for at the top of the move, either making the high of the day or a double top, again, a shooting star or some type of reversal signal, but with volume. Okay. And again, the key part there is the volume spike, which is going to indicate to me at the bottom of a move that it is exhaustion selling, or a volume spike at the top of a move that is going to indicate potential exhaustion buying, right? And so what I'm looking for here is some type of a reversal signal and a indication to go, if it happens at the bottom of the move, I'm looking for an indication to go long. If it's happening at the top of the move, I'm looking for an indication to go short. Okay. So here we go on PLTR yesterday. And so I'm hiding the candles from the, that go beyond 10 o'clock on purpose, right? So if we look at this, right? So open, right? It was a nice gap up, and we get this move up here, right? So again, just like I was talking about when we were looking at the NASDAQ or the S&P, look at all these green. I mean, yeah, you have a little red candle here, but for the most part, look at this move, right? That many green candles in a row. So what am I thinking at this point, right? At some point. Now, it doesn't mean it's going to happen right here at 10 o'clock, but generally, what do you think I'm thinking? It's a 5-minute chart after that many green candles in a row. Who wants to take a guess? Take a stab at it. What am I thinking? Pullback, right? Expecting some type of pullback. So now, and because it is a bullish, it's a bullish day, right? Because it was a gap up and it was an earnings gap. So there's a strong catalyst behind this move to begin with, right? I'm thinking I want to go bullish on PLTR here, but I need to wait for the right. I'm not going to go bullish here, right? I'm not going to go bullish here. Right? I got to wait for the right time to go bullish. So, because I'm certainly not going to be buying at the top, right? I'm going to buy as low as I possibly can. So first, what do we have here? This is a 15-minute chart, and we have the 5-minute chart here, right? So what do we have? The first 45 minutes of the market is what we're looking at, right? And then we get this next candle here, right? And we get red candle at the top. All right, great. Maybe we start getting some type of pullback. And then we get green candle. It's like, okay, well, maybe it's just going to be a small, like a couple bar pullback and then make a move up. Could be. But again, my thing is I'm looking specifically, like I want to buy as low as possible. So I'm just going to be patient. I'm going to wait. All right. Another big red candle comes in. Great. Okay. Getting some type of pullback now. And again, I'm not thinking that this is just going to roll over and go bearish, because there's a strong catalyst behind this move. So I'm expecting a strong bullish move on this, right? Now we get this kind of, spinning top candle, and it's like interacting with here is the 10 EMA right here, right? On the 5-minute chart. Okay, great. Still going to wait. Okay. Red candle comes in. Okay. But again, here's the key thing, right? And I've already said it. What am I specifically waiting for? Why am I being patient? What am I looking for? What am I waiting for? Volume, exactly, a volume spike. But Corey, what goes with that? They go hand in hand. So exactly, when I'm looking for a hammer candle at the bottom of the move, Ninja, I love it when hammer candle bottom of the move with a volume spike. Okay, so I'm just gonna be patient, right? Next candle comes in, right? Okay. Next candle. Waiting. There we go. Now, I want you to take a look at this. So Corey, right? Volume. Yep. So what did I get? I got, if you look here, right? What happened? Big volume, right? On this candle. And then what happened? Volume dropped off, right? You can see volume dropped off a little bit compared to this one. And then we got to pick up a volume right here, right? Now, you might go, okay, well, then that's the perfect time to go long, right? That's what I'm looking for. Not necessarily, right? And that is, and now I'm going to give you the second part of this, which is now I want to look at my higher time frame, right? I want to use the multi-time frame analysis. Okay. Arson is saying, how do you distinguish a big volume candle given the size of the candle earlier in the chart? So really what I'm looking at is, and it's a good question, right? So look here, okay? If you look at the size of this candle, right? And this is why we're just analyzing the candles, the price action, which are the candles, and the volume. So you look at this candle here and look how big that candle is, but it's on smaller, less volume than what we've been looking at, right? Then you get this candle. And at some point, this candle, okay, was bigger than this candle, the body of it, right? And look at the volume. The volume was slightly, might have been about the same. Let's look at this. Volume 3276, almost 3277. And so the volume here was greater, okay? So definitely greater. So you're getting a volume spike right here, right? So Arsis, think about, this is where we go, okay, well, what's the sentiment here? On this candle, there's very little wick at the bottom. Okay, so what that tells me is on that volume, right? On this volume right here, there was selling right through the close of that candle for the most part. Again, tiny little wick down below. But on this candle, look, there's more bearish volume, but you have a long lower wick. That's buying pressure. So what that tells me, Arsen, is that we're getting close, because here, the bulls were nowhere to be found, right? You can see that, right? No buying pressure whatsoever. Yeah, exactly, right? Bulls were off, having lunch, doing whatever. Nowhere to be found. Here, it was an equal battle, right? Lower wick, upper wick, about the same. So who won here? Well, technically it was a bullish candle, bulls won. But for the most part, I look at that and go, okay, even battleground. But then I look at this candle. And at one point, if you think about the sentiment of this candle, at one point, it was a bigger, slightly bigger bearish candle than this one. But look at the lower wick, right? So the bulls are coming, right? They're stepping in. So that's when I start, that kind of candle starts to catch my eye. And that's when I start thinking, okay, is it time? Is that reversal coming? Which I then start looking for the hammer candle, right? I want to see a hammer candle with volume. So this is at 1045, this candle, okay? Let me go now here, okay? So 1015, 1030, right? 1030. So if you look at here, 1030, right? And this is why the higher time frame is important. Much more bearish candle at 1030 than here on the 5-minute, right? You can see that because there's barely any lower wick. Okay, so let's go to the 1045 candle. Okay, so now 1045, I have technically a hammer candle down here with some volume, and here I have an indecision candle. So I'm looking at that, the higher time frame, and thinking, okay, maybe it's not time yet, right? Just like, brewing coffee, right? Is it ready or does it need more time to percolate? Well, not really ready yet because I've got an indecision candle. Technically, yes, it's double bottomed right here, but this is telling me to wait. Here, I might have a signal where I could go long, right? Because I have the hammer candle, it's got volume. But here, I'm looking at this and I'm going, okay, indecision. So I wait. Okay, next candle. Now think about this. Okay. Arsonist. Think about what would have happened if you simply put an entry above here, stop below here, right? Because that's what everyone does, right? You see a hammer candle with volume picking up, you go, okay, I'm going to take a break above it. Here's my entry. Here's my stop. And boom, you get triggered in. What happens? Price just reverses on you immediately, right? Immediately. And you go, oh, right? One of the reasons I don't like to take breakouts of breakdowns because the majority of them fail, right? And then you get a trap. Here's a perfect bull trap, right? People line up here to take this long, get triggered in, okay? So let's remove this line. I've got four more minutes. I can get through this. Okay. So what do? We wait, right? Because I'm not taking the break of this. I already explained I'm not taking this candle yet because the 15-minute chart isn't telling me it's time, right? I'm still seeing an indecision candle here immediately following a really big bearish candle, right? And this 1030 candle lines up with this 1030 candle where this looks like, okay, bulls were there. And this is telling me 15-minute chart. No, bulls aren't there yet. So I wait. Next candle. Okay. I've got a bullish candle, but it's not a hammer, right? And I'm not seeing any spectacular volume here. So I don't see really any reason to do anything yet. So I'm just gonna be patient. Boom, right? If you went long right here, entry above here, stop down here, you just got stopped out, right? You can see that very clearly, right? This was a perfect bull trap. Entry above, stop below, triggered in, verse, boom, you're out. Now what's going to happen? Arsis, what do you think is going to happen after this candle? Yeah, right? Because the algos, they see everybody's orders, right? So, yeah, buying pressure on the candle. Now, granted, this is not a perfect, like perfect hammer candle, but it's hammer, like what I like to call hammer-ish, right? Thank you. But it's hammer-ish. Exactly, right? But look at that buying pressure, right? Look at and think about this. At one point, this was a really big bearish candle, probably bigger than this one. But look at that long lower leg and look at that. There's your volume spike, okay? Yep. And so Win is saying just cleared out all the long stops. Exactly, right? Because everybody who went long here just got taken out by the algos or whatever. And now they're going to take the price up. So now you get this candle. This is 11 o'clock. So now let's go, right? Right? Now what do you see? Now I have my 5-minute chart and my 15-minute chart showing me the same thing, right? Here, I had a hammer indecision candle, right? Now I have a hammer, right? Okay, next candle, nothing, right? Price. So I'm not doing anything, right? Now what do we get? Right? Because off of this, I'm not going to just, right? It didn't break above it. Now what do we get? So we kind of get a whole lot of indecision candles. And now what do we get? Another hammer candle, right? Right? And decent volume, right? Look again, volume here, how it dropped off, right? Volume was like nothing. And all of a sudden volume picked up, hammer candle. This is now 11:30. Let's take a look over here. What does it look like at 11:30? Now you get, again, a hammerish candle, right? So it's kind of the reverse, right? Here we had hammerish and hammer. Now we have hammer and hammerish, right? But now, again, I have my higher time frames or my higher time frame in alignment with my lower time frame. Okay, it's 5 o'clock. Robert's hopping on here in a second, but let me just go through this real quick, right? Boom. So here now you can, here you can go, okay, Now you could have taken the break above this, but it didn't break above it, right? So now here you set up your entry, your stop, if you want to take the breakout, or if you want to wait, right? And so here's your confirmation candle. Now you could wait and do a limit buy and see if you get triggered in, which you did right there, right? So for all of you who, hear me talk about how I like to see the confirmation candle, then I set up my limit buy. Well, there's the perfect entry, right? And then boom. So let me just finish this real quick and I'll turn it over to Robert. But look, here was where I go. Here's my hammer candle. Next candle, I get my confirmation candle, right? Now, if this broke above and then it finished like this, that's not my confirmation candle, right? My confirmation, I need a strong close. I'm looking for this 3-bar, pattern here where I get the hammer and then I get a strong candle that follows here, follow through with a strong close. Then I set up my limit buy, right? So wherever I would have taken my breakout, I just simply set that up as my limit buy. And then that way I'm increasing the probabilities of not getting caught in a bull trap like I would have here, right? So set up the, so what I'm doing is I'm actually setting up my trade on the 5-minute, but I'm using the 15-minute to confirm the setup for me, right? I want the 15-minute and the 5-minute to be in alignment, right? I want to see the same thing, right? So here, set up my limit buy, or you could take the breakout. Either way, it doesn't matter. But this would have filled on the limit buy. This just gives you greater probability of success because you are not taking the breakout. You're not setting yourself up for a potential bull trap. Now, that candle comes in and then you get this one, right? And you've heard me say it, immediately my stop is going right underneath this candle. Because if I get filled on this kind of a candle with that lower wick and then I get follow through on the next candle, there's no reason this candle should get broken. No reason. So immediately I go from risking a full R to I am now risking like 0.2. Right? Because this, if I get filled on a lower wick like that, and then I get follow through, it shouldn't go back below this level. Because if it does, it's going to go even lower. So, all right. With that, it's 5:03. I think, let me check if Robert is here. He is here. You are here. Sorry that I ran into your time yet again.
I'm good, man.
All right. Let me stop the recording.